Good morning, everyone, and you're welcome to this morning's information webinar about our short course in collaboration with GillenMarkets called The Principles of Sound Investing. My name is Denise McLaughlin, and I'm part of the team in LIA, and I'm delighted to be joined here today by Rory Gillen, founder of GillenMarkets. Rory has worked in the financial services industry for over 35 years. He is a qualified chartered accountant and has previously worked in NCB stockbrokers, Zurich, and co-founded Marion Capital in 1999. He is also an author of 3 Steps to Investment Success as well, as a regular commentator in the media on investment-related topics. So we are delighted to have worked with Rory to develop the content for this course. And he also delivers and presents the modules on the course as well. So just in terms of what we'll be going through during the webinar, I will be giving you a high-level overview of the course delivery and logistics, and then Rory is going to take you through an overview of the course content, who the course is tailored for, and the modules within the course, and then I suppose the key takeaways you can expect to take away from the course. And then at the end, we'll have a Q&A for any of your questions. So you can just move on to the next slide there, Rory, please. Thank you. Yeah, so just in terms then of the course delivery, it's available on demand. So that just means that the lectures are pre-recorded and they can be completed in your own time and at your own pace. And then at the end of each module, there is going to be a short quiz that's just going to test your knowledge. There's 8 modules in total, and those that complete the course will get 3 hours CPD if you have an annual CPD requirement. You will also get a certificate of completion from LIA, and you can register with GillenMarkets to obtain a series of 6 complimentary investment-related booklets as well. And then just on the cost for the course, it is €300 for LIA members, and then €350 for non-LIA members. And registrations are currently open for the course, and more information on how you can register will be covered towards the end. So as I mentioned there, if you have questions during the webinar for myself or Rory, please do feel free to pop them into the Q&A box there at the bottom of your screen, and we'll look at them at the end. And now I'm just going to hand you over to Rory. So thanks, Rory.
Great, thanks, Denise. So as Denise said, look, I've plenty of years' experience in the investment markets, on the stockbroking side, but also out in the funds management side in Zurich for a couple of years. And this company was founded in 2005, and it's now an investment intermediary that offers training courses, a subscription-based investment newsletter for those who want to do the investing for themselves, but also investment advisory services or investment management services. That's what the company does. So I've been delivering investment training courses since 2005. What I've always been interested in is in delivering a practical course rather than a theoretically driven course in terms of how people can actually do it themselves or gain better knowledge from the practical side of the business. You know, we've all heard of the capital asset pricing module and how it is fundamental to valuing an asset, but unfortunately it's plain wrong. And that's been debated across the industry for many years now. And in the US, they have given up dealing or teaching the capital asset pricing model. And it's be important to understand why. So valuing assets is not an easy discipline, but the good news is that most investors or advisors don't need to be able to value assets to be sound at what they're doing. What they do need, in my experience, is an understanding of why the stock markets and property prices go up over time, and that's critical to what we do on the in the course with the LIA is to explain that in detail and bring the facts out to justify or to explain why the stock markets actually rise, and the reasons for why the stock markets rise in value over time is very, very similar as to why property prices rise. And when you know that, when you understand that, I think it gives you a better level of confidence. You know, what are the fundamental drivers of those returns? and how to ensure that you can capture those returns for yourself, but also if you're in a life and pension broker or an advisory firm or wherever in the industry, that it helps you to understand that. And then, of course, you have to be able to mitigate the risks or control the risks. Your job in investing is not to avoid risk; it's to mitigate the risks. And of course, you also have to understand why the markets are so volatile, and then get a good understanding as to why that volatility is not the risk you should worry about. In fact, it's rarely risk at all. And we do deal with that within the 8 modules. I think there's a dedicated module to understanding volatility and understanding why we believe that it's not actually risk. So the title of my book, Investing, was published in 2012, and I'm considering doing an update on it because I think I'd probably improve it somewhat at this stage. Is that the 3 steps? Because when we started the training course back in 2005, they were the 3 steps that I outlined at the time that I felt people needed to understand or adopt in order to make a success out of investing through their lifetime. And I still think they're the same 3 steps, which is understand the power of compounding and understand that you have to be patient to let it work its magic over time, to adopt an easy to follow approach for yourself or clients, and then understanding the market volatility and not letting the volatility knock you off course. These to me are very important sort of building blocks in terms of understanding and gaining confidence. So the course overview, deals with sort of financial planning and compounding. Everyone has to, plan what they can save, understand what they can save, and make great efforts to do that, either through personal savings or pension savings. Obviously, pension savings is a lot more tax efficient. But the examples around compounding that we use are revealing. And indeed, I'm often told on the one-day seminars that we do for retail investors that the section on compounding is the one that they most enjoy. Then you've got to understand why the stock markets produce better returns. Because if you can't understand it yourself, you're not going to be able to explain it to clients. You've got to be able to define the risks. What are the risks you're actually trying to control? And then there's several ways of gaining exposure to stock markets. For life and pension brokers, it may well be just the life company funds, the range of funds they have. But for somebody like us, it's there's many other ways. There's exchange traded funds, there's investment trusts, there's individual companies, there's investment funds that are available from all of the big investment managers across Europe. All of those are available to gain exposure to the markets. And then defining the long term, very important. If you have the good understanding of what the long term is, some people say it's got to be 5 to 10 years. Well, that's not actually the full explanation of what the long term is, because in our world it very much depends on whether you're investing regularly through a pension over time, or whether you've got a lump sum to invest at a point in time. What the long term is very different for both of those different investors. And then you have to obviously understand the key differences between speculating and investing. The stock market fulfills the gambling instinct in human nature, which allows people to speculate, and the liquidity in markets allows people to speculate. But it's an entirely different discipline than investing, and the differences should be understood. And then, of course, there's stock market terminology, which we deal with. There's the impact of interest rates on asset values, which needs to be explained. I think without doing a PhD on the whole thing, it can be explained in very simple terms, and the course does that. There's a module that's dedicated, of the 8 modules, there's one dedicated to understanding the impact of interest rates on asset values. And obviously, if you've been in markets for the last couple of years, you've seen that the rise in interest rates from 0 to 1% up to the sort of 2 to 3% in Europe now, or 4 to 5% in the US and 4 to 5% in the UK, they have an impact on asset values, and that's important to understand. And then it's also important to find approaches that are relatively easy to follow. Keep things simple, mitigating the risks. And then, of course, there's a recap at the end. I think Module 8 is a recap on everything, so that you recap what you've listened to. Obviously, learning is about listening first, taking the time to listen to courses, and then actually then either doing an exam or actually bring it into practice, which is where you learn. And obviously, the course that the LIA has obviously a session of questions at the end of each module to make sure that you've learned as you've listened. The various modules is financial planning, stock markets produce better returns. These are the actual individual modules, so that you know what you're actually signing up for and paying for, that you're getting something that is real added value. And if I've been doing these courses, this course for over 20 years, I pretty much know what makes sense for people and how they learn, and how to give practical examples, and which step comes first. So first is obviously financial planning, compounding, why the stock markets produce better returns, what the actual risks are and how you gain exposure, and then getting on to the long-term investing. Impact on interest rates, impact of interest. A little bit of repetition here, but bear with me. Then adopting an easy to follow approach, which is important. I think certainly communicating to your client, that's important to communicate that, etc. So who's the course for? Well, look, I think it's aimed very much at the life and pension broking industry, where you may have done the QFA, or some of you may have gone on to do the CFP, and you're looking for something that's a little bit more practical. Anyone starting out in the financial service industry that just wants to understand the industry a little bit better. Pensioneer trustees, important. They go into meetings not knowing anything, then they're not going to be able to ask any questions of the fund manager that's presenting. The returns on the fund. Retail investors, obviously. Here's a testimonial that I got back in September. I haven't, because I've been doing these one-day investment training courses for over 20 years. It's probably about 10 years since I asked anyone for a testimonial, but a gentleman who was happy to give on, indeed he volunteered it, who was on the course last September. This is our one-day training course. The 8 modules you do on the online course, or you're being offered on the online course here through the LIA, breaks down is essentially the one-day investment training seminar broken up into individual modules, so that you can digest it on your own time. But it's worth taking a minute to read that testimonial, because it's very powerful, and quite proud of it. Where he's saying he's now attended 2 sessions. One was a free workshop, by the way, which just led him into the one-day investment training seminar, which he had to pay for. And he feels it was money massively well spent. And while he did learn new concepts, the most valuable part of it was how it crystallized ideas that he'd understood but hadn't fully put together. In other words, he hadn't put the jigsaw together. And if he could turn back in time himself, I think this gentleman was in his 50s, he would have taken this training 30 years ago. It wasn't available 30 years ago, but it was available 20 years ago. And if you're considering where to put your money, just get a bit of training first, is what he's saying. Some key insights. Look, stock markets rise over time, but the key insight here is that it's got to be in a democratic country that's democratic and pro-business. There's no point in thinking that the stock market works in countries like Venezuela, Russia, Argentina, any of the Middle Eastern countries where there is no democracy and governments aren't generally pro-business. You have to make those basic assumptions. You've got to have a good understanding of the critical differences between somebody who's investing regularly over time and somebody who has a lump sum to invest at a point in time, because the actual the risk profile of both of those investors are completely different. And then how you define the long term, because the long term is very, very different depending whether you're a regular investor or a lump sum investor. And all of these things are brought out very clearly in the 8 modules. Why those who are trading markets cannot in aggregate hope to get the returns on offer. In fact, their return is likely to be a zero return. And it's very important to understand why that is. Yes, it's fine for people in hedge funds and people who want to gamble in the market or speculate in the market to argue that they will get a sound return or get a better return than the average. But the reality is a lot different, and you have to know the statistics around that, which we do. Our basic principle, our teaching is that you've got to own the asset if you want the returns from it. And when you express it like that, it becomes actually self-evident. Clearly, you can only get the return from the asset if you actually own it. And if you take yourself back to your parents' time, and they bought a house in, say, the mid-1970s or the mid-1980s, and they held that asset over time, they benefited from the rise in asset values or the property values because they owned the asset. The stock market is far more liquid, and therefore it facilitates you if you want to buy in and sell out. But that doesn't necessarily make that right. So if you think like a property investor where they generally can't sell too quickly, then they don't, and they tend to just own it, and they're the ones who benefit. Risks need to be defined. I mean, it's different types of risks. There's the great, macroeconomic risks, which we define very carefully on the course, and I think we define it, much better than I've seen it explained elsewhere. And also, then there's the risks in the individual assets, whether that is an equity, which is a share, whether it's a bond, government bond, corporate bonds, investment grade corporate bonds, non-investment grade. Renewable assets, infrastructure assets, gold, precious metals, all these different asset types and what the risks are within the individual assets are important to understand too. And then, of course, there's growth investing versus multi-asset investing. It's important that you understand the distinction, why you might do one versus the other. I think for Irish people who are very property orientated, it's important to understand that there's actually as much property available in the stock market as you could ever want. So property is not a separate asset class in our view. At times, physical property may act or provide returns in an uncorrelated manner to stock markets, but ultimately the drivers of property prices are the same as the stock markets over the long term. So again, just these are some key insights. I'm trying to just answer some of the questions that may be in your head of making a decision as to whether to do the LIA online course or not. And so in terms of market volatility, it's how to explain why volatility is not actually risk. It's how to cope with the volatility, because it's always going to be there. It's a feature of the stock market, and some people say it's a negative, and that is true, but there's a lot of positives that come from it as well in terms of the stock market. The stock market is very different than physical property investing, just different characteristics which make it something you have to understand. And understanding the equity risk premium, the premium return that has been available over the long term for taking the extra risk. How time in the markets lowers the risks of a poor outcome as long as you're diversified. And of course, understanding that there's really just the 5 major asset classes. Another commentator may disagree with me on this, so it's kind of my view that there's the 5 major asset classes. That is equities, fixed income government bonds, inflation-linked government bonds. Sorry if there's a little bit of noise in the background. It's just I'm in an open office here myself. Inflation-linked government bonds, which covers a separate risk compared to fixed income government bonds, bank deposits, and then precious metals, principally gold. They're the big 5 asset classes in my view. The industry does have other sort of products that diversify risk, like absolute return funds and hedge funds, but I would not class them as separate asset classes at all. I think they're just method of extracting a return while controlling risk in markets. But ultimately, these 5 asset classes provide or deal with the growth, which is equities, and the other 4 assets cover one of the major economic or political risks that are there. Hedge and absolute return strategies and funds that adopt them are not a separate asset class, and it would be good to learn why. So, what can you expect as a takeaway from the course? You should improve your understanding of the core principles of sound investing. Should allow you to better communicate these principles to clients. Should improve your ability to question fund managers. What questions you ask them. Should encourage you to set up your own financial goals and achieve your own financial freedom, which is a worthy goal in life. So I'll leave it at that, and I'll open it up to Denise and any questions people may ask, and I'll certainly try and answer them.
Yeah, great. Thanks, Rory, for that. There's loads of information there. So just kind of looking through the questions now. And someone just asked there, Rory, they wouldn't know much about investing. And they're just wondering, is the course suitable for somebody with no prior investment experience, or will they be lost?
Yeah, no, again, very, very, very normal question. And all I can say is that I've had to make the course easy enough for somebody coming onto our one-day physical courses, the in-person courses. And there are people coming with no information whatsoever, no background. Just bear with me 1 second. Hey, so the answer is yes. You have to, when you're coming to something where you don't actually know much about the topic at all, you've got to start somewhere. So you should not expect that you're going to become an expert at the end of it, and you shouldn't expect that you will follow every detail of the modules. But you've got to start somewhere, and if this is a basic course that takes you on the journey to showing you how to become a decent investor, or how to understand markets and invest with a plan. But you then have to take the critical next steps, which is do something with it. That can be either using that practically then in your own company, or doing the CFP afterwards, or actually taking up investing yourself, whether it's just investing through fund structures and learning about the different fund structures and which ones you can buy online or not, and things like that can improve your knowledge then over time. But you have to start somewhere, and I would well, I don't just claim, I know this is the right starter course for people to understand or get the whole framework for how does the stock market work, what is it, why does it produce better returns, and then you can actually do that in practice, either for yourself or with clients, or at least be able to articulate that in an improved way.
Great, thanks. Someone's just asking, how long are each of the modules? So each module, between all across 8 of them, they're between 15 to 30 minutes long.
Yes, that's right. Yeah.
Yeah. And then someone else, Rory, just asked, what practical skills would they be able to apply after completing the course?
Well, again, it's a CPD event. So what it's trying to do is improve your knowledge, improve your ability to communicate. That it should improve your ability to practically implement it yourself. I always use the word self, because if you can do it yourself, you can certainly do it for clients. So that's the practicality of it. It's the actual practicalities of how you get going in terms of investing. What is an asset? What are the various assets? What are the various assets supposed to do for people, for clients? What does a multi-asset fund actually mean? Why do you actually put different assets into a client's portfolio? What are you actually trying to achieve by doing that? Is it a better return, or is it controlling risk? And those key understandings are going to raise your level of understanding significantly, and it's what you then do with the course after that, in terms of either yourself or, as I said, in your business.
Yeah, great. Someone else has just asked, how long do I have to complete the course? So you will have access to the course content for about 6 months from your enrollment date. However, it is advised that you complete the course as soon as possible so that you're getting the most out of the course. And you can go back and revisit areas in the course as well. You can move back and forth between lectures as well.
Yeah, and it's I'll chip in there, Denise. Important to say that you can do it from your PC in your office. You can do it from a tablet at home, just sitting on the couch, or you can do it from your mobile phone on a if you're traveling in by bus or train or whatever, and you have a headphone. You can do it. You can do it in many different ways. It's very flexible like that. You know.
Exactly, that's it. And somebody else had just asked, are the lectures or any of them live? So they're all pre-recorded and they're delivered on demand. So they've been designed to be very, very flexible. So again, like you can start and stop the lectures whenever you like. You can come back to where you left off. If you've only done half of one, you can come back and complete the rest of the module a different day. So it's very, very flexible like that.
Yeah, and I'm the person you'll see on all 8 modules. I do all 8, so there's a familiarity to it and a consistency to it.
Yeah, exactly. And then someone else is just asking, does the course provide guidance on ethical or responsible investing?
No, not particularly. That's something we can discuss with the LIA as separate. I mean, I've suggested to the LIA that there's several other little courses we could do that people would may be interested in beyond the basic course there. One of them is ethical or responsible. The other, of course, is precious metals. I mean, gold is a fascinating area. The whole, inflation linked government bonds is a very interesting area as to how it controls risk. All those kind of things can be dealt with in time if the LAA have an interest,
Yeah, great. And Rory, somebody else has just asked, they have the APA investment. Would this course suit them?
Could you repeat that? I didn't get that anachronism there.
Sorry, yeah, they have the APA in investment. So they've done that designation, and they asked, would this course suit them?
Yeah, what you'll find is that what I've had to work out is a course that is very different than academic courses, which teach, correctly teach the theory behind investing, and probably deal with some other more practical issues in terms of compliance and these type of things as well. But ours doesn't. Ours is just as, what are the practicalities of actually investing and why? And I've a strong belief that you've got to have a good understanding as why, what drives the stock market up over time to be confident that the principles are correct. And I find in academic courses that's not that isn't the way they approach things. So I think this is a good adjunct or a good addition to the body of courses the LIA has, which and just is much more practical in its approach, because I have to be practical and to teach a retail audience, which I've largely done over time, is really to make it practical for them, because they're not quite interested. They won't get any benefit from the theoretical side of markets. They really want to know, how do they actually do it? How do they understand it? And then how do they start implementing it? And so for them, it's a key understanding as to the risk they're taking, the different asset classes that they should understand, and how they actually get access to those asset classes. What funds do they look for? What are the different fund structures that are out there? And things like that I find are much more practical.
Yeah, great. And there's just a few questions in on assessment. So is there going to be a final exam? So there will be a short MCQ exam after each module. And then just a question on the course cost. So as mentioned previously, it's €300 for LIA members, and then €350 for non-LIA members. And I think that is all the questions covered now. So if you just want to move to the very last slide there, Rory, I'll just discuss how you can register now.
Great, yep.
Yeah, brilliant. Thanks. So if you are interested in registering for the course, you can register now through our website. And if you're not an LIA member, you can still register for the course. You just need to create a free LIA profile. And if you'd like any more information, or you need any help registering, just please email us, Sarah, at education@lia.ie. So yeah, I'll just wrap up there now, and I'll thank everybody for joining us this morning. I hope you found the webinar beneficial, and you're able to take something away from it. And thanks again to Rory, another really informative session. And just a reminder, we'll be contacting everyone after the event with a copy of the recording. So if you have any other questions, you can reach out to us there as well. So I hope you all enjoy the rest of your day, and thanks a million, everybody.
Yeah, thanks, Denise.
Thanks, Rory.